Let's start with Ecofin and the bank talks. I mean, in a trading room like the one behind you, what's the general chat about this? How cynical are people about this?
Oh, very cynical indeed. I mean, I think the bottom line is that nobody feels that the core is likely to write any significant checks for the periphery, and Germany has been very forthright, saying that legacy issues, i.e. the mess that certain banks may or may not be in right now, have to be dealt with by the sovereigns. So people looking for that link between sovereigns and their banks to be cut, it's not going to happen quite yet.
All right. I mentioned China and Japan. We've been talking about a broad-based acceleration of economic growth for a while now. You see China, you see Japan, and there are cracks. Are we overestimating, or rather, are we underestimating the difficulties China is facing?
Yeah, I think very much so, and I've said this for quite some time. And look at China. We've gone from January joy to February fear on the trade numbers, and I think the market's massively underestimating the task which is ahead for the government in China, rebalancing the world's second largest economy from investment towards consumption, and at the same time trying to diffuse a massive credit bubble. And just within the last few days, we saw the first onshore default of a Chinese bond. And in terms of Japan, you've got this enormous inertia out there, business investment falling back again, and I think the BOJ are going to step in the second quarter. I think that's a done deal.
All right, equity markets, the way they've been reacting to all of this and what is priced in. The start of this year has not looked nearly as good as the start of last year. What is the overall tone, do you think, for the market?
Well, the talk is bullish, but if you actually look at the price action, it's actually very, very cautious. You look at Europe. I know that it's been hit by Russia-Ukraine over recent sessions, but we are down for the year. Even in the US, we're up about 1.5%, and you've got higher volatility as well. So I think the prognosis for markets this year remains mid-single-digit returns for investors. I think we've probably seen the last of the vintage years last year for some time to come.